The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 1st terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. Now, my outcome during the next hour, well, it's to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. Words of wisdom brought to us by our extraordinary producer, Al, who makes everything we do here at TFNN seem so seamless. And it most certainly is not. Now, Al, he starts his day with the following incantation, and you should too. Just write this down. He starts off and says, hey, watch your thoughts, for they become words. And watch your words, for they become actions. But watch your actions, for they become habits. And hey, watch your habits, for they become your character. Most of all, watch your character, for it becomes your destiny. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show out here. Let's go check out the destiny of the markets right now. Dow is up 109 points, trading out at 16,936. She's finding some legs out here, up 0.6%. You've got the S&P up 0.5%, up 9 points, trading at 1969.41. NASDAQ Composite up 36 points, up 0.8%. Russell 2000, the lead dog in the house, up 1 full percentage point, up nearly $12 right now, trading out at 38. No, I take that back. 38. Trading at 1204.75 out there. Trading at 38.78 is the NDX 100. The New York Stock Exchange up 55 points right now. Goldilocks up 6, trading at 13.28. Silver up 9 pennies at 21.15. Light sweet crude up 57 cents. Our call-in number is 877-927-6648. Feel free to give me a call, folks. Happy to take a look at your stock chart, answer whatever question I possibly can. Lead the charge here to the upside this morning is Priceline up $30, trading out at $12.33. That is running into resistance of its unfair low. It's old support line, which should become new resistance. We'll see if it does. Netflix is up a nice $23, trading at $4.63. Salix Pharmaceuticals up $12. Regeneron Pharmaceuticals up $13. Intercept Pharmaceuticals up $10 out there. Maybe we'll look at the IBB. Cooper Companies up 7. That's up 5%. Arista Networks, ANET, up 11%, up $7. To the downside out here because of a couple of spin-offs, both Timken Company and North Star Realty. They're down 19 and 17 respectively, but we'll move beyond them. You've got Synergiva Biopharma, GEVA, off 11%, down $12. Acuity Brands, AYI, off $12, down about 9%. Trading out at 126.15. Fidelity National, FNF, off 14%, down 470. Western Gas Energy, WGP, down $2, down about 3.5%. Chesapeake Energy, CHK, off 5% this morning, down $1.77. All right, let's go take a look at what these markets are doing. Let's go take a look at the market profiles on each of the futures contracts just to get a feel for where it is at. So we've got the ES Mini right now. It's trading above its resistance level, its market profile resistance area, which is at 1954.75. It's traded at 1963 right now. It's also trading above its June 24th swing point, a little key reversal session. That was priced at 1960. So if it can hold the 1960, if it can hold 1954.75, that would be bullish. That would set up a little small A to B equals CD to the upside out here. Let's go take a look at these different A to B equals CD patterns. Let's look at the small one. Small one from an 8-point here. I would use the low out here of June 16th. That's at a price level of 19.19. That's your 8-point. Your B point's going to be the key reversal session on June 24th. That high, as we said, 1960. Little retracement for a couple days. It held the market profile support level. Let's use the low of June 26 out here, 1936.25. Your 1-to-1 A to B equals CD. B point, by the way, has volume up a little over 1 million shares. Today you've done, 1.1 million shares. You've got a confirmed A to B equals C to the upside, and you're taking out a reversal area with volume. That says 1977.25. That's your small 1-to-1 A to B equals C. I'd say 1977 and 1988 is what it looks like the ES Mini has in store for it. Now let's pull this back further. Let's look at the larger A to B equals C. Let's come off of the lows back here on April the 14th. That's going to be our 8-point as soon as I can grab it. Why can't I grab it? That didn't work. Let me delete this. There we go. Okay, let's start over here, see if Stevie can actually do this correctly. So our 8-point, maybe because of where it's located. Give me a moment here. Come on, work for me. There we go. There's the 8-point. That is going to be the April 14th area. Now, we're going to use as a B point. Let's use what we should use. That is going to be the high from April 24th. C point down here on April 28th. We're now up at the 1 to 1.618 A to B equals CD area. That would be that would be 1972.23. Let me go back and add the smaller A to B equals CD. I had accidentally deleted that. Let's see where that runs into price-wise. So at the 1972 to 1978 range is what it looks like the ES Mini may want to travel up to out here. Now, the problem here on the daily basis, the potential problem, is that the ES Mini is making higher highs. It's doing it with less relative strength. However, that's just a potential pattern out there. Would need to see a reversal signal in order for that to be of issue at the moment. So that is in the ES Mini. And that had been running into resistance, but today it is taking that level out. NASDAQ out here, if we take a look at the NASDAQ, she's trading at 38.71 out here. If you take a look at patterns. Yesterday we showed the consolidation pattern. That's the consolidation taking you back into November 27, 2013, area low of the consolidation being around the 33.97 area. Top of the consolidation box being the 37.26. So 3,700 down to, 34. So you got a 400-point consolidation. That says that the NQ, having broken the consolidation, could easily make a run to the 4,100 area. You're at 38.73 right now as we speak. Volume behind the move here today so far, 154,000 contracts. Last swing point had 161, so not too bad from a volume standpoint inside of the NQ. Let's go take a look at the Russell 2000. As I mentioned, Russell 2000 leading the charge to the upside in the markets percentage-wise. Russell 2000 now trying to take out the take out the swing point of March 7th. That swing point high, 1203.70. The intra-session high so far is at 1202.30. Expect a test of that area from the contract standpoint. I don't have the volume here so sorry about that. But what the Russell is doing, it's making a 100% move out here. It could be a place where it begins to get tired. We'll go take a look at the IWM here momentarily and take a look at its volume. We'll take a look at the volume characteristics when we go take a look at the ETF structures out here. So it is in a full bullish mode out here, up above. Let me go back to this. It's in a nice full bullish mode. It got there yesterday with a close above its market profile high of 1185. And as I say right now, we'll see how it handles the 1203.70 mark. Closing above that would also be additionally bullish out here. Let's go look at the Dow. That is the only futures contract we have not covered here. The Dow futures right now. This is the daily chart out here. Let me pull this back. A nice big move. So everything's going to get back in sync because the Dow had been the weakest. It had been traveling below the market profile support level, which is at 16,769. You're now well above that. You're at 16,860. So it is taking that area out. So 16,889 out there is what the Dow futures need to get above to have all the markets up above their resistance level. That would be all four of the futures markets. So we know the NASDAQ is above its level. That's at 37.99. The Russell got above it yesterday. The ES Mini is doing it this morning. And if the Dow can get above the 16,889 level, there will be no reasons out there other than trying to sell a top tick to be short in the market that I can see. Other than, I shared during the first hour, there are some divergent patterns that lead to eventual pullbacks in the marketplace. But as we took a look at it in the GE/Dow correlation, the last time it took 20 some odd days, I believe, 20 days or so before we actually saw the markets cracked out here. So, I'd say the Dow is the number to be watching today, 16,889. Let's go switch over. Let's go take a look at the ETF structures. Let's go see what they're doing out here. Let's go start with the IWM. Let's take a look at what it's doing. So its swing point out here, high that it's doing, dealing with, is from March the 4th. Let me make sure. That's 120.58. I believe that's it. It is. Not only was it not is it its all-time swing point, it's a high volume high out there. So that suggested that eventually it would be tested. So take a look what the IWM did out here. Here's a great example from a technical standpoint. You talk about making a 100% move of a move, and then what can happen. That's why we want to take a look at this, right? If you take a look at the IWM, and I'm coming back to the trading. Well, let me pull back even further out here. Let's really take a look at it. In fact, let's do this, just to clean up the chart, just to put things in perspective out here. Let me see if I can do this. Yeah, most certainly. So give me a moment here, and I'm gonna turn off many of the tools because we're gonna turn them back on. So I'm gonna turn off the TAS box. I'll leave the A to B equals CD. Turn off moving averages, navigator. Volume. I'm going to leave the volume. So the only thing I'm going to leave out here on the chart. So this will be great. This will be a great tool for us to go take a look at the IWM and analyze this together. Now, whenever you're taking a look at a stock chart, I want you to take both of your eyes and I want you to focus one eye on a swing point and the next eye on volume bars out here. Okay? Now I'm going to use the line tool out here. I'm going to use this line tool, and son of a gun. There we go. Okay. Let me do this first. I'm taking a look at, from a volume standpoint, there are three bars that stick out at us. I'm coming all the way back here to November 1st, 2013. If you take a look at the volume in the IWM, 117 million shares. Now, I don't know what took place on that day out here. I have no idea if it was rebalancing. I don't think it was rebalancing. But there, you got a high volume bar. That's where we're going to go. You see, we can't really remember what took place back there. We know we've got 117 million shares. 117 million shares, if you can take a look at my crosshairs going across the screen, you're going to see that level was tested twice. Remember the number 117 million. It was tested at the lows here back in February with 60 million. It was tested back here at the lows in May with 75 million shares. That is what held it in place out here. It's that volume, it's that group of buyers out here inside the IWM that have held things in place. That's making a 100% move from the time period of February 5th, where it ran from the lows to the high we're now dealing with today, that March 4th low. March 4th high, and it moved all the way back there on that trading session of May 15th. We get back from this first breakout here. We'll continue looking at the IWM as it tries to deal with, maybe take out, maybe stall at the March 4th high. That price is 120.58. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den. Wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 119, S&P up 10, NASDAQ composite up 41 points out here. Let's go back and take a look at the IWM chart out here. So we're taking a look first, before we're going to break, we're taking a look at this high volume bar from November the 1st out here, 107, what's the price point is 107.26 out here. We see that volume bar was tested several times, so we can take a look at this potential large consolidation pattern that is setting up here. We're taking a look at our price, 100% move of a move. That's coming down and testing that February 5th level. That was from, did that on May 15th. Now what we're seeing here is the IWM move all the way up to the highs. It was a high volume high, 120.58. Still hasn't been tested here just yet. Volume so far this morning, we've been trading for nearly an hour. You've got 10 million shares. 10 million shares. Yesterday did 34 million shares. So you've got some pretty nice volume. Nowhere near the type of volume of 112 million shares that took place on March 4th. Not unless there's all kinds of buying that comes into the IWM here. It's a doable thing. But right now, a test of 120.58, meaning spiking up above it, closing back below it, is what's considered a failure on price and volume. And he closed above 120.58, volume or not, would be additionally bullish. So there is the swing points. That's, take a look at swing points. They become your target areas as to where price would gravitate to. Now, let's go put on let's add to the chart here. Let's take a look at the relative strength divergent patterns out here, see if we've got anything forming at the highs inside the IWM, and the answer is we do not. We do see the IWM from a 14-period RSI reading is at 70.27. Anything above 70 starts to get into a overbought zone out here. So it does make sense that you would see the IWM as it makes this move up here, makes 100% move, moves into a swing point with lighter volume. You would say the likelihood of it moving sideways or retracing would be very likely, considering it is in overbought territory. Let's go add now the signal box. Let's take a look at the market profile, high and low out here. These are the daily charts we're looking at here. Market profile high or resistance was 118.49. It was broken through yesterday, trading well above that today. So long as it stays above that, you stay in full bullish mode out here. Breaking below 118.49, that offers the likelihood of price probably pulling back to the 115-ish area. I'd have to say, in looking at the stock chart, I'd come back here to this little breakout session from June the 5th as an area to watch. There was a little bit of a gap up inside the IWM. The bottom of the gap, meaning the high of June 5th, was tested. That high, by the way, is 114.88. There was 67 million shares there. It was tested back here on June the 13th with only 33 million shares and held. So that's a nice level of support. That's what I would expect the IWM to be able to hold. And if it cannot hold that, then that says that gives us a different meaning. But we'll take a look at that. Let's look at some moving averages out here. We'll put two moving averages on the screen. The pink one, once the pink one crosses the white one as you're watching this on Tiger TV, that's a lagging indicator. Nonetheless, it is a bullish lagging indicator, and that's what's going on inside its stock chart. So that has been in place ever since its gap up on May 27th that had 46 million shares out there. And that's really all that we really need to be paying attention to, in my opinion, at this stage here on the chart. I've got this nice linear regression tool. Kind of helps to identify zones of travel. You really use that not as so much as resistance, but you use it as, I like to use it more as stop management tools than anything else. But it does show that price is also running into the top of that model as well out there. So that's what's going on inside of the IWM. Let's go take a look at the Qs out here, see if there's any kind of volume behind the move in the Qs. They're up 70 cents out here. Pathetic day yesterday, lowest volume day in quite some time inside the Qs, as they did volume of 19 million shares. Today, already up with 7.5 million shares in the first hour, so not too shabby. We'll see how the day continues out here. The IWM, the easiest way, the QQQ, the easiest way, in my opinion, for us to try to identify where price might want to move to is just simply take a look at expansions of swing points. Expansions of swing points mean taking a look at the March 7th high down to the low that came in here on April the 15th. And on April the 15th, that low was at a price level of $83.28. Your 1.272 expansion is 93.56. It's traveling at 94.64. It is saying that it wants to move up to 96.35. It is in extremely overbought territory. RSI reading of 77.85. When we get back from this break, we'll go look at the NQ on a 30-minute chart. You want to talk about being overbought? Wait till we see that reading. 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Pretty good fireworks display this morning. Right now, we've got the Dow up 107, S&P is up 10, Composite up 43 points, Russell up 13, New York Stock Exchange, nice market breadth, I believe, on that. It's up 57 points. Yeah, you got declining issues at 732, advancing at 2177, so you've got a 3-to-1 net advancing issues of 1445, so good market breadth out here as well this morning. I mentioned the NQ. We were talking about the Qs itself being overbought. That was looking at a daily chart out there. Take a look at this reading here. You're up at almost 89, 88.29. Now it's a 30-minute chart that we're looking at inside of the NQ here. Let me do this here. Let me make this even a cleaner chart. Let me turn a couple of things off. So give me a moment. Nah, I'm not going to do that. That'll be too much work. Sorry about that. Not that I don't like doing too much work, but it's too much hassle then to turn things back on. Let's take a look here. Now, the reason why I say that we want to pay attention to this is kind of interesting. You know, a rubber band can only stretch so far. albeit it's a 30-minute chart that we're looking at. But we're trying to drill down into the time frames just to understand what is going on here. So as we take a look at the NQ, and the reason why we're focused on the NQ is because it's leading the market certainly on the way up out here. So you're up at its session highs, 38.76 right now. The last time that the NQ had gotten this overbought on the 30-minute time frame takes us back into the trading session right around, now I'm going to go back, so we're in the trading bar here that finishes at 11 o'clock. The trading bar that finished at 11 o'clock right here, yeah, because we're 10:30, that happened to be at that 11 o'clock hour. It wasn't the actual high. It was very close to it. Interest session out here. This is back on the trading session of June the 24th. By the way, we had a key reversal session that took place on that trading session. Price got up at the RSI reading on this. I don't know if I can grab it this way. I might have to. Now, let me do this here. Let me show the data box. Okay, so the actual RSI reading up at that level coming into 11 o'clock took us up into 84.32. You're at 88.38 right now. Never got up to 88. Never got up into the 88s type range out here. But we did see what the pattern that was out here on that 30-minute chart. I'm going to blow it up on my screen here so you can take a look at it. We'll pull it back a bit. You saw that price finally started to stall, and it started stalling with some small-bodied, spinning top-ish type candles. They look like dojis. They smell like dojis, but they're not. Just little spinning tops out here. Nonetheless, small-bodied candles was a signal that it was losing steam out here. And then you saw a bearish reversal signal. Then you saw a bearish engulfing candle and a move lower to work that condition off. Now, that was back on June 24th. I'm going to use another technical term here called scrunching. I'm going to scrunch my screen together here. So what to be looking for out here, long or short, intraday basis, is you'll be looking for some small-bodied candles to move sideways. This condition has to be worked off. Can it move higher? Yeah, it can move all the way up to 100, although you really don't see that occur. But, hey, anything is possible. Let's let me go back a little bit further in the chart and see if we can find any other ultra-high readings like that. And if it takes us back, so we can find another set of ultra-high readings taking us back into June the 5th out here. June the 5th, we saw the RSI get up into about the 88.86, a little bit higher than where it's at right now. And the market then just simply moved sideways for a long period of time. You can see it was working off. It was moving. The market was moving a bit higher out here. It was moving higher to sideways and really continued doing that for quite some period of time, all the way into for the next trading session out here. So it was a very strong move, very strong market move. The candle started to get a little bit smaller out here, but this was dealing into the trading time frame of after the close inside the market. That's not what we're dealing with right now, because this move higher, this ultra-high reading was taking place earlier in the afternoon, like in the 1 to 3 o'clock time frame out here. But it does show that the momentum can continue on, but you need to start seeing a move sideways to work off some of that bought condition out here. So we'll see what happens. That's on a 30-minute chart out here. If I switch this to the 120-minute time frame, we're going to probably see, let me do this, we're probably going to see this is also in a bought reading. Yeah, on the 120-minute time frame, you're up at an 83.26 level. Let's pull this back. Were we up here? Yeah, you were up here during that time frame of back where we're looking at in May 27th on the 120-minute time frame was the last time was up near these levels out here. Actually got higher. So in May, the RSI reading came in at 88.75. You're at 83.33 out here. But that rubber band is really being stretched out here. So whether it's a move sideways will be bullish. A retracement lower will be bearish. It'll all be about the candles that form out here. But this thing is truly, truly being stretched to its limits out here. That is taking a look at the NQ, which is the strength inside the marketplace. On this 120-minute chart, let's take a look at how about that? Let's take a look at, I'll eventually get there, let's take a look at the Dow futures, because they had been the weak link out here. So we'll take a look at all four. So let's take a look at the Dow, just see if there's anything that pops up that we need to be aware of. So we're going to look at the September contract here for the Dow. What is this telling us here right now? It's making a 100% move. It's traded all the way back into its swing point from June the 22nd. The top of that swing point is priced out at 16,911. You are at 16,863. You're inside that swing point right now. It suggests that it ought to see a test of that. But on the 120-minute time frame, it too now has moved into a overbought zone out here. So it'll be real key to see how now when it does that. The bearish pattern that arrives is because you're up at these levels. If it starts moving sideways and then moves higher, and this we're going to say like higher tomorrow, moves higher and does it with less relative strength, that could set up a potential bearish oriented pattern. You don't really want to see that going into July 4th, but that may be, in fact, what takes place. We're only in July 1st, so just the first set of fireworks that have shot off this morning. They're pretty good fireworks. Let's go take a look at the Russell 2000. Let's go see what the Russell here is doing. It, too, on the 120-minute time frame, moving into a extreme overbought territory. 82.18 is its 14-period RSI reading out here. Last time it ran into this level, actually got a little bit higher on the reading. It got up into about the 85-ish range, and that's when it made a high. It fizzled out. This was one of those fireworks that began a retracement. That's back at the time frame of about June the 8th. Made its little finale high at the time frame of 12 noon out there, and that was on the Russell 2000. It made, looks like just kind of a natural retracement. Looks like about a 0.382 or so retracement, forming a little price relative strength divergent low, and then began moving topside. That's the 120-minute chart there. Let's go take a look at the ES Mini. Let's go see what it's doing on its time frame. It, too, showing that it's in the overbought zone. Not as overbought as the Qs or as the Russell, but out at the sets above 70. It's at the 72.39 today area, but it's up above its swing points out here. The swing points being from 10 p.m. on June 22nd, as well as 12 p.m. on June 24th out here. So bullish for the ES Mini as we speak right now. Let's take a look at some stocks here. Well, let's go back. Let's take a look at gold, silver, see what they're doing. We'll take a look at their market profiles. You've got Goldilocks. She's trading up $7 at $13.29. The level to be watching today, $13.34 happens to be the 0.618 retracement level for gold. It's also dealing with resistance of its market profile, which is $13.2660. You want to see, from a bullish standpoint, you want to see it close above those levels. Specifically, $13.34 would be good from a bullish standpoint. Silver, on the other hand, silver is in full bullish mode, up 12 pennies right now, trading up. About 12 pennies, trading out at $21.17 out here. It wants to make a run for its most recent swing point high, which is in the February 24th trading session, the range being 21.55 to 22.22 out there. Silver looking mighty strong out there. Light sweet crude is trading out at 105.47, only up 10 cents right now. Let's take a look at it so that I can find, there you go, there's the market profile. Its market profile for its daily chart, and it is held as a support area. It's the old resistance. Old resistance, in this case here, has become new support, and that's at 105.10. Any close below 105.10, you probably see light sweet crude trade down into the 103.48-ish type range out there. Some things that are moving in the marketplace out here. Let's take a look at IBM. You got IBM is up a couple percent this morning, up $4 out here. Let's go see what it is doing. Volume behind its move this morning, 1.9 million shares, moving into a swing point from June the 9th. And is that the swing? It looks like June 9th or June the 6th out here. Both those have about 3 million shares. You're up here this morning with 1.9, so it's moving into a swing point with volume. That is good. It is changing its trend, trying to change its trend You have not seen IBM. So if you take a look at these market profiles, if you're watching this on Tiger TV, let me point this out to you. If you take a look at the market profile in the resistance area that began May 12, 2014, that's the red horizontal line going across my screen. See how that acted as resistance? Price never broke above it. New market profile begins here May 22nd. Price never breaks above it. New market profile begins June 2nd. Market never breaks above that level. New profile begins here on June 17th. Market never closes above that profile. Today, that is what IBM is doing. It is trying to change its trend. It's above its market profile. 183.61 is the number. If, in fact, it closes above that, it will be the first time that IBM will have taken out a resistance level since May the 12th out here. And if we take a look at where is it that IBM could travel to, well, let's go take a look at some volume bars out here, see what we see. Got this downdraft out here. That's from April the 17th. So that would be a bar I'd be focused on. That would be the low of 187.01. The high is 190 out there. I'd also take a look at retracements. So let's go take a look at some retracement levels. Let's go look from the shooting star high that was put in. That's a reversal signal out here. That was on April 10th. That ended up being the swing point high. So we're going to use that as a little benchmark to pull our retracement ruler down into. We're going to come all the way down into the trading session of June 26 out there. So the retracement level, dead cat bounce, 186.89. It won't stop there, or likely shouldn't stop there if it in fact it closes above 183.61 today, because it is changing its trend. It says that IBM ought to move up then to the 191.59 area as its next move to the upside. We do see here that IBM, as it was making, let me go ahead and I'll delete the retracements out here. Be a little bit easier for you to read. Let me delete that. Interestingly enough here on the chart of IBM yesterday, a little bullish engulfing candle. And what it did yesterday was it actually confirmed a price relative strength divergent pattern, interestingly. Not yesterday, 2 days ago, the trading session of June 27th. My apology. Yesterday was a little doji candle out there. But if you take a look at the trading session here, you can see that it made a low on June 12th. That RSI reading was down around, no, it's not on my chart out here, was down around 33.33, so right around the 30-ish type level. Made a lower low, did it with less relative strength out there in the trading session of June 26, a bullish engulfing candle. Followed it up next out here. Now you're seeing a break at topside. So that's on IBM, looking mighty bullish out there, or mighty bullish from a change in trend standpoint. We'll see how it ends the day out here. Let's go take a look at the jazzy one, Jazz Pharmaceuticals. JAZZ is the ticker symbol out here. JAZZ trading out right now at 151 and change out here. It is going to try to take on a swing point and resistance of its market profile. Now here, the opposite of what we just looked at from IBM. So we'll come down and take a look at Jazz Pharmaceuticals. We take a look at its market profiles. We'll take a look coming back to the time period of April 2014, establish a market profile around the 123.60-ish type range out here. We never saw price come back and close below. We saw it get tested on April the 15th. Price came back and then tested its newer market profile that formed on April the 25th out here. Price never closed below it, acted as support. Next market profile shows up June 2nd. Price never closed below it, remains bullish. Another market profile begins June the 10th. Price tests it, never closes below it. A new market profile inside of the Jazzy one begins on June 24th. Price tests it, never closes below it. As long as the JAZZ doesn't close below its market profile low or support area there, it should remain in what? It should remain in a bullish mode. Now, the Jazzy one, taken on the June 23rd swing point high, 616,000 shares out there. So far this morning, up with 164. So maybe a little bit light on volume out here, but if it could take that out, yeah, that could set up an A to B equals CD to the upside. Right now, you've got the, what do we have? The Dow's up 116, S&P is up 11, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 114, S&P is up 11, NASDAQ Composite up 46, gold up $7, trading out at 13.28, silver up by 12 pennies out there. And I forget where we were. I was talking about Jazz Pharmaceuticals. Okay, so we took a look at IBM. We took a look at JAZZ. We were looking at the market profile, so we're able to identify how you can use those that set of tools out there to help you identify trends in the marketplace out there by using the unfair highs, the unfair lows. So that was good. Let's take a look at some things here Moving to the upside, let's go take a look at the Chipotle. Up 1%, up $8 right now. It's trading out at $600. Let's go see what Chipotle is doing out here. It's trading into resistance, so it too is in a nice full bullish mode. If you just simply take a look at the market profiles that it has created ever since its change in trend coming back in the time frame here of May 1st, 2014. It's had its fourth set right now is what it's on of market profiles that have formed out here. So long as Chipotle can stay above, not close below 590.20. You can see it's a very narrow banded market profile that has just formed out here. Then it will continue or should continue its trend higher. It's running into a little bit of resistance. It's unfair high. It's market profile high. Just slightly right around the 602.36-ish type range out here. Chipotle looks like it wants to get into make at least 100% move of a move and try to get back into the swing point high from March 21st. That price area, 607.36 to 622 inside the marketplace. So to the upside here, we've got just a whole wide variety. Got Amazon. Let's go take a look at Amazon because it has been a weak link out here. It's up $6 this morning. Let's go see what Amazon is trying to do out here. Now, Amazon, we've seen Amazon also show a bit of a change in trend out here, right? We just utilized the same charts that we looked at here, IBM, Jazz, Chipotle. If we take a look at Amazon, it had completed a 1 to 1.272, A to B equals CD to the downside, creates a swing point back here on the trading session of May 9th, forms a new market profile low during the trading session of May 13th out here. Price never closed below it. Creates another market profile low back here on May 29th. Price never closes below that. Its current market profile low is in place right now, 322.28. So long as Amazon does not close below, it can test it, but as long as it does not close below 322.28, that change in trend still is intact out here. Now, what Amazon needs to do in order to really change its trend out here is to get above its B point, its swing point from June 11th. 4.4 million shares out there. Last time up to test it was with 5 million shares, so it was actually pushing higher on the trading session of June 19th out there. Even though the candle closed lower for the session, it still was pushing highs with volume. Today, 1 million shares, hour and a half of trading out there, so it's a little light on volume, but a lot of time left in the trading session. If Amazon ever does take out the high of June 11th, the high being 340.72 and do it with more than 4.4 million shares, Amazon will go ahead and move up to the 379-ish area. You can see here on the way down, the market profile, the resistance levels also held ever since the time frame of March 19th out there. So that was on Amazon. So you can see a change in trend in place as we speak right now for Amazon. Well, folks, it is Terrific Tuesday. That means we've got our man Basil Chapman up next. We're going to go ride the Chapman wave. After that, it is the futures, the options hour. I take that back. Options hour from the folks at TD Ameritrade. Then we've got Gerald Martin, David White, Andy Heck, the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.